He has also previously worked as a consultant at EY and KPMG, two of the Big Four consulting firms. Next, we have CS Vinay Shukla, who is the chairman of the Gurgaon chapter of NIRC of ICSI. He is the founder of March Ahead Always, a Delhi-based NGO supporting the government in policy formulation related to foreign investment, education and safety, and the director of Whitespan Group, a compliance and regulatory advisory management consulting firm. Next, we have CA Aanchal Kapoor, who has been in practice for the past 10 plus years in a field of indirect taxes with the following experiences: practical exposure in the field of GST by handling various departmental works, including appellate work, Joint Secretary for All India Federation of Tax Professionals, delivered 500 plus seminars or webinars on GST to members and industry across India. She is an approved faculty at NACIN GST Officers Training Cell and the faculty for various certified courses on GST. She has also authored various articles on GST published from time to time in AIFTP Journal, Tax India, ACAE Journals, Tax Group, etc. She is approved faculty of ICI and has done various courses on GST, including GST certified books from ICI. She is an active member of ITRA, Independent Tax Research and Analysis Association, and has qualified for CA in the first attempt in 2009. She is a merit list holder at various levels, a rank holder in CA and gold medalist in graduation, a merit holder in LLB, and has done forensic audits and fraud detection course by ICI. Next, we have CA Divya Agarwal, who is a fellow member with the Institute of Chartered Accountants of India and has qualified her LLB. She is an alumnus of Sri Ram College of Commerce, Delhi University. Currently, she is a partner in one of the leading chartered accountancy firms, namely Ms. Savaria and Company, Chartered Accountants, coming into GST. She had worked with renowned Big Four consulting firms. She is regularly contributing articles, infographics, and videos on GST for students as well as for professionals by way of a YouTube channel, Tax Accountants. Due to her professional capabilities and with the continuous love and support of her viewers, she has crossed 1.5 lakh subscribers on YouTube and has also been recognized as a Young CA Achiever by NIRC of ICI in CA Women Conference in 2019. Also, she has been provided with a certificate of appreciation by NICS of NIRC of ICI for the contribution made by her as a faculty in GST courses for students of ICI. Last but not the least, I would like to introduce CA Vinesh Sundriyal, who is a chartered accountant offering plus years of experience in domain of taxation, accounting, and finance. Presently, he is a partner with Sundal Chaudhary and Associates Chartered Accountants. His area of specialization is GST and is engaged in providing GST consulting, litigation, advanced ruling, and training. He has conducted more than 100 plus seminars or trainings in GST at various forums of ICI, ICSI, different universities, and for corporates. Now, I would like to invite Advocate Bhanushali, my host for this conference, to take over.
Greetings, everyone. I'm Advocate Vidhi Bhanushali, the Chief Strategic Alliance Advisor of SK Associates and Group, and Shravan's co-host for the day. I would like to request all the guests and attendees to kindly.
Your webcam, Vidhi.
I would like to request all the guests and attendees to kindly switch on the respective webcams during the conference. I would also like to inform all of you that Ms. Tejal Patwari and team are conducting polls in the chat box throughout the session. Do actively participate in the same by giving your opinions on the polls. Now, I would like to invite CS Jaspreet Dhanjal, Chairperson of Patiala Chapter of ICSI, to commence her speech.
Am I audible?
Yeah, ma'am, you're audible.
Okay, thank you. Good evening, everyone. First of all, I'm grateful to be a part of such an intellectual conference on the emerging tax issues for the Incorporation of Start-ups. And thank you so much to the team of SK Associates for having me as a speaker on this topic, because I think this needs to be talked about, especially here, especially when we talk about our country, especially when we talk about India. India being a developing country, I think not just us, also the government of India is looking forward to how to, initiate, how to encourage, how to motivate people to go into startups. The time of COVID-19 actually taught us that when people were losing their jobs, that your own passion, your own talent could actually lead you a long way. Rather, I won't say it was it was a very bad phase for all of us, but many of us discovered our passion. Many of us discovered that how we can actually, monetize our passion, and how we can actually put something into it and start your own startups. We have seen many people, maybe they're very small. I'm not saying that they have become very big. Everything takes time to get big, right? Like we say that Rome was not built in a day. So it takes time, but still we are initiating towards that. So I think that all the people should be encouraged by the government and what government is doing at this point of time for startups in India, for sure. The people, they know that how it is dealt, and as per the LinkedIn analysis, the top 3 startups in India, one was LinkedIn, the second was Udaan, and the third was Cred. The first was Unacademy, the second was Udaan, and the third was Cred. I just flipped. So as per LinkedIn, these were the top 3 startups of India. Unacademy, it was just an idea to teach people online, and it actually full-fledgedly succeeded, especially when we were in COVID-19 times. Many people, because we had no option to call the students and teach them. So many people switched from offline to online. Now, I am personally being associated with Unacademy. I know one thing that made me believe, and one thing that I could feel while talking about startups is that yes, this is providing something. It is changing the environment. It's not just, providing only the paid subscriptions, but we being the YouTubers, we are giving there the free special live classes. So that could be accessed by anyone and everyone. So I believe when you start a startup, that's not for your own, that actually grows your country, grows your economy at large, and it gives you that access that yes, you can do more about it. So that is it. The 3 startups that I talked about, of course, one is the EdTech startup, Unacademy, B2B e-commerce platform, Udaan, and the third is the fintech firm Cred. Now, this lists 25 young, innovative and emerging companies, which shows that Indian youngsters or the young people or the coming generation could step up, could, put their idea into a startup and lead something new with the economy. I would say that I deal with students daily. They are CA, CS, CMA professionals, whether on YouTube, whether on Unacademy. I would just say that they only think about, are we going to do job or are we going to do practice? They don't think out of the box. For me, I think now we as professionals, we as experts should step up and think about something big. Think about the startups. Let's just, put a great idea forward, which not only leads us, but also, helps to grow the whole, I would say the nation together, the community together. That will definitely step up and give that change to us. And of course, for doing anything, the first thing for setting up a business, for a startup, even if you're opening a shop or anything, one thing that hits every person's mind is tax issues. What will we do about tax? And that actually makes them go and approach the professionals as well, which is a good thing. But if we talk about, startups in India, so startups in India, firstly, I'll talk about the tax incentives that Indian startups enjoy. So launched in 2016, the Startup India registration, it was an initiative that was the creation of our Honorable Prime Minister Narendra Modi ji. And the startups which were found between April 1st, 2016 and 31st March 2021, they were initially they were qualified to apply for the tax exemption scheme, in our words, we call them like tax holidays. But however, in the now budget of 2021-22, the eligible period was extended until March 31st, 2022, and also 2023. Now, what the Finance Minister Nirmala Sitharaman ma'am told us, she said that in the times of COVID-19, the country has seen a rise in the startups. She said that it was a rise in the established startups that are coming up and that have actually changed the face and the scenario of the country altogether. The finance minister stated that in our economy, startups have become the main source of new growth. Of course, again, I would say that when we talk about developing country, how will we grow when there'll be more, business job opportunities, and that are actually created from small ideas. A small idea is put into a startup, and that actually gives rise to a bigger option altogether. So in simple words, the period of incorporation of the eligible startup, now it's extended by 1 year, that is March 31st, 2023. In normal words, we call it the sunset date for the incorporation of startups business. It has been extended under Section 80 IAC of Income Tax Act 1961 by a year. Now we talk about what is like an eligible startup. Eligible startup, it's nothing but it should not have completed 10 years from its incorporation. Because see, if the startup has already been so long, you have actually established yourself. So in other words, government is supporting new startups. So if you will plan a new startup, definitely government will step in and give you the tax exemption, the tax holidays under Section 80 IAC. And of course, it can be an LLP or it can be a registered company. Now talking about the tax issues, if I talk about, of course, startups can take a lot. Startups, we are talking about the tax holidays, the tax issues, in which actually in the tax holiday, the tax exemption is 100%. So actually the government is not taxing anything for a good period of time, so that if you are a new startup, if you step in, the government is there to help you. Government will definitely step in and help you in every way possible as they can. What are the tax issues? Now, I will tell you about that. So if you are a registered, now, there are eligible startups, but you can also start your startup as a registered partnership firm, as a registered partnership firm, as an LLP, as a registered private company. So these are the three, forms of businesses, forms of organization in which you can come up with your startups. But you should know, there are pros and cons of everything. So if you come up with a startup which is a registered partnership firm, what will happen? The tax consequences I'll tell you. So the first thing is that partnership firms can avail presumptive tax regime under Section 44 AD up to the turnover of business which does not exceed 2 crore rupees, which we all know that presumptive business scheme is a good scheme in which probably you're running your startup or your company without maintaining the books of accounts and without getting them audited under Section 44 AB. So this is a tax consequence which will definitely put the person to go here and not under the positive side. Of course, the positive side, there is no angel tax under Section 56(2)(7)(b) of the Act. So there are no questions of exemption from angel tax. First proviso to Section 68, again, it's not applicable to partnership firms and whatsoever. But the biggest con of this form of organization is that the eligible startups don't recognize the registered partnership firm. So as in, there is no tax holiday under Section 80 IAC. So I think if you are going to start, because all of us know that with the upcoming times, LLPs and registered companies are actually initiated more. They are given more upper hand over anything else because they are the form of organizations which could lead to more growth with similar features. LLP is just a kind of similar feature with the this registered company only, with taking up the limited liability into it. It's a partnership form of business with limited liability, so it helps that way. So that is why they are promoting these two things and not registered partnership, because at the end, without liability, there are other issues also for people who are involved and for partners and everything. So definitely it goes that way. Section 54 GB benefit of capital gains exemption is not allowed to promoters, to partners who sell their residential properties and invest in startup firms. So basically, if they think that we'll sell our residential properties and we'll invest in startup fund, you'll not get any benefit under Section 54 GB. And tax rate. Now, this is a sad part that if you go to the form of startup private limited company, you will be taxed with 25% whenever you start taxing, whenever the startup starts with the taxation rates. But as a registered partnership firm, the rate is 30%, which is really a bad on the part of whenever you start taxation, you're paying so much to the taxation for sure. And if we now talk about the second form, which is the LLP. LLP as in limited liability partnership, for which recent amendments were there. And this is a kind of, I think, the business which after companies now being motivated and initiated the most so that people could go into LLPs, which is also correct. It's a partnership combined with limited liability, good for the people who go into it, good for the people who start their startups. The first thing I would say is that 80 IAC tax holiday for LLP is just like declaring holidays on February 29, 30 and 31st in non-leap years, because we have AMT, that is alternate minimum tax, and under section 115 JC, which is applicable to the LLPs. And the most important part is this is taxed at 18.5% of adjusted total income. And the negative part is that AMT totally negates section 80 IAC, 80 JJAA for the benefits of startups. So you can't say that you're taking total tax holiday if you come under the AMT regime. You will have to go that way and you can't actually get 100% off, right? It is just one way, one side which you see that it is a tax holiday, but when you go into all the taxes, when you look into all the whole of the IT Act, it is actually not like that. Right. So this is the first thing. Secondly, again, the section 54 GB, exemption benefit under capital gain exemption is again not available here to the promoters or the partners who sell their residential properties and invest in startup. The positive side, again, no angel taxes there. That is a happy point for LLP also and for our partnership firms also, that angel tax under section 56(2)(7)(b) is not applicable. And again, the tax rate is same. For companies, it's 25%. For LLP also, it is 30%, which is again not a good part. And LLP also cannot take the presumptive scheme under section 44 AD, which could have been taken by the registered partnership firm without maintaining, books of accounts, and without auditing them. They could take up their businesses under if their turnover is less than rupees 2 crore. So that's a good part. And now talking about the private company. Private company, if you'll compare with everything, they have good amounts of pros if we talk about going for the startup. But the first thing is that, again, here, as we had AMT earlier, here we have MAT, that is minimum alternate tax. Now here they say that tax holiday can become actually illusionary for the private company startup if MAT under section 115 JB applies. That is also again 18.5% of the book profits. That is what talks about 115 JB, and it's more than tax on total income, book profits, then it shall be the total income, and 18.5% of book profits. So that is why, again, I would say that it looks like 100%, it looks like tax holidays, but when we look at a wider picture, it's not fully a tax holiday. But here, one good thing is that section 54 GB benefit of capital gains is actually available to the registered, to the private companies. That is why the startup form of businesses, it could be more beneficial if you go with the private company, as here they are getting for sure. See, when you start a startup, again, you are a person with good idea, but probably not with good resources. It could be a point, right? Not everybody starts with, handful of resources. Everyone takes time. So probably I could say that I want to sell my house and I want to invest it in my startup. So how would I do if I'm not getting the exemption also? At least I want that exemption in my taxes. So for a company form of business, you will get 54 GB. There are few, conditions which definitely apply to the same when we read 54 GB of IT Act. That totally stays the same. Here, angel tax is available because, it's applicable, because it's actually applicable to the monies received against the equity shares, which are issued by the startup private limited company, and issue price is in excess of the fair market value. So in case this thing happens that your issue price, it is in excess of the fair market value, then you will be taxed with the angel tax, which is not a good thing. And the first proviso to section 68 is applicable to private limited companies. So these are the things which I would talk about if I'm talking individually about them, about all three forms of businesses. Though they say that, the eligible startups are only LLP and private companies, but you can go for a registered partnership firm. But talking about current times, if I would have to suggest, I would suggest you more like LLP or registered private company, because they have more more, pros, and also I believe they have more scope in the upcoming times as well as to the registered partnership firm. Talking about the comparison, now I'll tell you the comparison of the three. So the first point was about 80IC. So 80IC tax holiday, or the so-called tax exemption scheme, it is not applicable to registered partnership firm. Yes, it's applicable to LLP and private limited company, but that too, subject to the fulfillment of the conditions that are stipulated in the section. For example, that their turnover for all the years should not exceed 100 crores, and they should not be made with something like existing companies already. It should be a new idea, a new feature that you have come in with, and something new that you are putting ahead. The second point was 54GB. Now in 54GB, it's very simple, of capital gain tax. It gives you the tax benefit to the promoter selling his residential property and investing in the capital, or then the company's business, or investing in that. So it is not available to registered partnership firm also, and to LLP, but it is available to the private limited company. So in simple words, if you're someone not having that much money, and you want to sell your property and go in, so I would really suggest you to go with the private company, because again, startups are like that only. I don't think people jump into startups with lot many resources. They go ahead, they step ahead, slowly they tread ahead, and then they make their steps ahead. Effective tax rates are different for all the types of organization, because if you're subjecting to AMT, MAT, they are different. For registered partnership firm, it ranges between 31.2% to 34.9%, depending on the income size. For LLP, again, it ranges between probably the same, 31.2% to 34.9%. For private company, it's lower, because for companies, the tax rates are also less. Subject to MAT, it ranges between 26% to 29.8%. First proviso to Section 68, as regards the capital raise from residents who reside, and the investors have to satisfactorily explain themselves. It is not applicable to registered partnership company, or a partnership firm, or LLP, but it's available to the private limited company. And talking about the last angel tax, it is not applicable to, again, partnership firm, LLP. It's negative part, but it's applicable to the private limited company. It's applicable. However, it's exemption available subject to the fulfillment. So these are the three kinds of organizations in future if you want to go into startup. And these are the tax issues which you should look into. It is not only don't look into we have 100%, taxation and we are going there. So it is not like that. There are many other aspects which you should look into, but definitely I'm not favoring any kind of organization. I shouldn't do that for sure. And you can, but just what I want to say is that there are pros and cons of every kind of organization one chooses for startups. So one should understand all the relevant applicable acts along with Income Tax Act. It's not just Income Tax Act, but also look for the other relevant acts which you should look into. And if there are tax holidays, there are other applicable taxes also. So make sure, but yes, nonetheless, startups are the best form of business if you look forward to. And I would encourage more and more people, like I encourage my students also, to think out of the box. We all should think out of the box. We should come up with our ideas, put forward. Don't think like what will happen in future. Till the time you don't put forward your idea, put it forward, work on it, definitely you'll succeed. So I would just say that just be aware. That is the first thing, or the first precaution I will tell. If you don't have knowledge, go and consult a professional, but be aware, choose smart, and grow yourself along with others, because it is one kind of organization which will help tread others alongside you. And that is it from my part. Thank you. Shravan sir?
Yeah.
Yes, sir.
Beautiful and marvelous speech. Moving ahead, I would like to invite C. Navya Malhotra, member from NIRC of ICAI, to commence his speech.
Thank you. Thank you.
Yeah, welcome, ma'am.
Okay. A very, very good evening to all of you, and thank you for giving me such a platform. Jaspreet ji, thank you for wonderfully elaborating the technical issues, to Shravan ji, Riddhi ji, and to the whole team. The topic has been marvelously chosen regarding the taxation aspects of startups. And when I talk about startup, ideally what comes to our mind is opening our own business, very much by our own, starting with our own funds, and having nothing about it. It is less like starting from the scratch. Since I belong to a very much of an indirect tax background, Jaspreet ji has marvelously covered all the aspects related to income tax, registrations. I would particularly like to touch various aspects of indirect tax in depth, and then we would proceed to the other aspects also. When I talk about startups, when we start any kind of business in a small scale, I am particularly understanding the aspects we are starting on a small scale. And when we start any business from small scale, when we have taxation structures like GST and indirect tax implemented in India, we have to understand the tax structure day by day is becoming complex. And when I say complex, in the rush of making it ease of doing business, we are making towards jam of doing the business. Particularly when I talk about compliances, the compliance is not easy, it becomes complex. And structures where like GST, when we have schemes like QRMP, quarterly return monthly payers, the cash flow is one such aspect which a startup needs to put in mind while starting the business and putting indirect tax structures in place. When we have GST, we have to understand we are either way will be dealing in goods or in service when we start any business. When we have services, we have threshold of 20 lakh rupees. But when we have goods, we meant to make in interstate supplies, one from one state to another, we need to take registration even for 1 rupee. And that makes it more complex. I'm understanding to my knowledge that when we start with a goods business, anything which is a movable item like my cell phone, like pens, like anything like calculators, anything, and that can be sold from one state to another, the registration compliance starts from day one, from even goods of 1 rupee. And that makes it more complex when we take multiple registrations in place. When GST law says that you need to take multiple registration in a state from where you are making a taxable supplies and you have a fixed establishment. So multiple registrations can be triggered that you can even have to apply for 29 states, 29 registrations. And adding to that, one ISD compliance also, input service distributor. So there can be a lot of confusions and complications when we have interstate supplies between the same GST numbers. When we have a same PAN and multiple GST registrations, we have cross invoicing. That is the third aspect I wanted to target. The cross invoicing is a very typical aspect that is coming in GST. When you have a head office, let's suppose in Delhi, and you are dealing in multiple states, let's say in 5 states, you need to do cross invoicing. The cross invoicing concept says the originator is a Delhi registration giving supplies to the registrations like salary, like HR remunerations. Something which is maintained at Delhi and serving all requires cross invoicing also. The fourth typical aspect in my understanding comes regarding the interpretation of the statute. The interpretation of the statute has been totally difficult when I talk about startups. Startup might be having something which is innovative. And when innovative something comes into picture, the interpretation and the classification becomes a major task because it is not something which is doing in the ordinary course of business. It is something which you are innovated and which is something out of the box. And when something comes out of the box, the classification one becomes a very typical matter that whether you have to charge 12% or 18% or 5% or 12%. So it becomes a typical aspect to that extent. The next very typical aspect that government has recently implemented is regarding the 2B compliances at a 0% tolerance. When I say 2B compliance to the 0% tolerance, it becomes that another person who supplied you has to show it in your 2B and that only credit is allowed to you. No certain relaxation is available to anyone. Now, what comes is the section reference. It is the 16 subsection 2 clause A, which is a newly implemented section applicable from 1st of January 2022. So in the year we are standing right now, we have this section applicable and makes it very tough to comply with that. When we have procured something, we have any tax invoice, we have received it, we have made the payment to him. Certainly, then also we are not allowed the credit just of one single non-compliance that he has been not able to upload the invoice in time. That has become a difficult aspect also. And now, when I talk about strict compliances, now the registration becomes a hustle. When a new business starts, you have to take registration. Registration also takes a lot of time in GST now. Earlier were the days, the golden days in GST, when the registration used to come in 4 days. Now is the time when it even takes 40-45 days to come for the registration. The person wants to start the business, he is not able to take the registration within time, and then he is not able to start the business, or he is delayed in starting the business, causing him an unnecessary delay of all the operations. Either way, he has to make a lot of compliances even for taking the registration. He has to upload good number of documents, and he has to justify it multiple number of times, even the officer seeking the income tax return sometime, to show his possibility of the business, which to my knowledge is impossible when a person has even not started the business. So operational viabilities cannot be checked, but there are unnecessary compliances being asked for the registration also. Now to the end, when I say there is no facility for the revising the GST returns. So whatever the startups then start, put certain number of staff for the compliances. They may not be potentially that much capable or that much competent enough. They may file certain things wrongly, but there is, you have to understand, zero tolerance, no revision possible in any of the GST returns. Yes, we have amendment possible in the future returns, but that puts on the record whatever you have done wrong will be in the record, whatever you have made the right will be in the record. It is rectification, not revision possible. Secondly, the major clause hitting a startup right now is like aggregator models. What I can understand, Shravanji, that many of the new businesses are starting now on an aggregator basis. So that case, the section 9 subsection 4, 9 subsection 5, 9 subsection 3 comes into picture. That is the reverse charge mechanism. In 9 subsection 5, many aggregators have been captured, and certainly like today, aggregators like Zomato has been captured under the scheme. Now, the compliance becomes on the aggregator rather than on the person who is doing business through that aggregator. So startups becoming an aggregator have a lot of compliances added now from this year. So this becomes a typical lot of compliance burden. Another is the 180 days compliance burden. When I talk about 180 days payment, you have to make all the payments within 180 days. Otherwise, your input tax credit becomes reversible with interest from the date you have availed a credit. In that certain case, it becomes a typical aspect again. Another thing, if you're dealing in a business of goods, a minor e-way mistake can cost you 200% of penalty. Again, this is a strict compliance when I talk about startups. There could be some possibility where some compliance relief could have been given, but still GST lacks that aspect. Lastly, when I talk about absence of the tribunals, when I say absence of the tribunals, the judiciary, the appeal mechanism still lacks the good spirit. We now only have first appeals in the GST. The second appeal still lacks to be formed. The tribunals are yet to be constituted, making it a difficult paradigm for all the businesses who are starting the business. Like suppose I started when I said it is interpretation or classification issues existing. And when interpretation or classification issues exist, we want to appeal. And when we appeal, we want to move to the second appeal if we lose the first one, and the second appeal still not constituted. Makes it a tough aspect for any new business to start. With this, Ravanji, I would like to conclude, and I would say, do the business with healthy spirit, but understand the compliances of indirect tax. It can make you indirectly hit the business and close the business very soon. Thank you. Handing over to you, the team.
Yeah. I would like to thank CA Navya Malhotra for his informative speech. It was an amazing opportunity to hear him. Now, I would like to invite CS Vinay Shukla, founder and director of Whitespan Group, to start the speech.
Hello, can you hear me? Am I audible? Am I audible?
Yeah, sir, you're audible, but your voice is not that clear.
How about now? Is this clear?
Yeah.
Am I audible? Am I audible?
Yeah, sir, you're audible. Yeah, you're audible.
Thank you very much. Thank you, team. And thank you all the listeners. While many of the listeners has talked about the tax regime in India with respect to the startups, both income tax as well as the GST, direct and indirect taxation both, I wanted to draw your attention towards the benefits, taxation benefits, incentives available across the world, which are not only beneficial, but they are quite attractive in the sense to invite various startups to start their businesses in the country and to develop a different kind of business environment. In that relation, let me come out with the tax schemes available in the US. In the United States, the federal government has come out with one of the major tax incentives, which is available to the startups in the form of R&D tax credit. Under the IRS code of section 41, the startups company may apply for the tax incentive in the form of R&D tax incentive of $250,000 per year against their social security tax liability.
Mr. Shukla, you're not audible very clearly. If you could just speak a bit more loudly and put up your video too.
Am I still not audible?
Yeah.
Yes, Shravan?
It's not completely clearly audible. If you could just speak a bit loudly.
I'm speaking on top of my voice.
Okay, if you could just be a bit more loud,
Okay, I'm trying. Should I repeat what I have said? Okay, thank you. I was saying
You're audible.
that many of our friends has talked about the tax regime in India for the startups. While they have covered direct tax benefits as well as indirect tax benefits available under the Startup India schemes or the tax schemes for the ESOP tax deferment or the problems what they are facing under the GST or many others, I want to draw your attention toward the tax benefits or the tax incentives available in the other countries. If we need to develop our startup ecosystems, we need to see what the other countries are offering to the startups. In that sense, or in that line, I would like to draw your attention that what are the benefits, tax incentives available across the world. In that context, let me just share what US is offering. In US, if I say, the federal government offers a scheme of R&D tax credit under section 41 of the IRS code, where they provide US dollar 250,000 in the form of the R&D tax credit per year to each startup, provided the company has the gross receipt of $5 million, and this is available to them for the first 5 years. This is one of the major tax benefit or the incentive available to the organizations. And it is available continuously for the 5 years altogether. Likewise, like the federal government, many state government also offers either the similar or identical benefits to the startup companies. For example, California offers R&D tax credit similar to the federal government, and besides that, they also offers the benefit for the qualified activities taking place within that state. New York State offers the tax credit for the qualified emerging technology companies. It is available for the it is broadly available for the technology companies. Now, like the US, if I talk about UK offers one scheme which is called the Enterprise Management Incentive Scheme. Under this scheme, a qualifying startup with the assets less than £30 million allow me this name, may offer the fixed price sales option to keep stock on the board, and the stock won't be required to pay the tax. And likewise, they're also not required to pay the national insurance. EMI scheme don't apply to some industries, including the banking and property management companies. But this applies to almost all the technology companies, heavy technology companies, and other service sectors. Likewise, they also offer EIS scheme, which is called the Enterprise Investment Scheme. Under this scheme, the individual investor buying the shares in a qualifying startup or the social enterprise can claim up to 30% of the income tax relief from their investment. And in this case also, when they are selling their shares, they're also not required to pay the capital gain tax. These schemes not only help the startup to have the flow of funds on an easy basis, but that also helps them, help the investor, help the angel investors and the investment companies to make a happy investment in all the startup company or even in the social enterprise. Likewise, if we talk about the Seed Enterprise Investment Scheme is also available in the UK. Under this scheme, it is similar to EIS schemes. Last but not least, there is a scheme called the Social Investment Tax Relief. Under this scheme, your startup, if it's a charity or a community interest company, the UK government allows investors to offset the risk of offering up to the 30% of the tax relief. What I'm trying to say, in India also, the startup face a lot of problems in terms of the investment. They are tax strapped, they are not getting the funds despite all their efforts. And if we have the tax incentive like this, that not only help the individual startup, but develop the startup ecosystem in a big way. this can be provided besides our current startup in India schemes. This will not only help the startups, but it will also aid the startups beyond the metro cities and beyond the existing setups. Thank you very much. Mrs. Kumar, you can take it forward.
Yeah, Riddhi, am I audible?
Yeah,
So
I
just
can.
take.
Yeah, you're audible. Yeah. Yeah, Shravan?
Yeah, actually, Ms. Anshul Kapoor is not being able to join due to network issues. So until she does, I would like to invite the attendees to ask any queries if they have any. Attendees, any queries?
If anybody have any query, I'm there to answer.
Yeah, Ms. Kharbanda.
Yeah, good evening. Actually, this is not really concerned with just asking. Like a new startup which begins and maybe due to some, maybe not malified, but due to omission, and they fail to file their ITR for the first, say, 1 year, first year, formation year. Is there a provision that that the there is a provision in the law that they can do it with a penalty or something in the later on years, or what could be the recourse for that, if that is possible to answer?
Yeah, Justice Vinay.
Yeah, sure, please.
Ms. Kharbanda.
Sorry.
Mr. Am I audible, Riddhi?
Yeah, sir, you're
Yeah, you're audible.
Okay. Vinay. Am I audible?
Yeah, you're audible.
Okay. Am I audible?
Yeah, you're audible.
To invite any other speaker for answering the question. I guess there is a network issue over because unfortunately, Ms. Kharbanda. So exactly what was the question, Ms. Kharbanda?
Yeah, I just wanted to know, like, there are many provisions as far as income tax returns and filing, and provisions for, rebate in the first formative years for a new startup. So I just wanted to know, just maybe a new startup, it's an omission, not a malified intention, that they do not, or they fail to file a return, say for the first year or maybe the second year for the formative years. Now, is there a provision that the tax is like in the later years, or it is? I mean, will that penalty be there, or what is the recourse for that? Say a late filing, or in the formative years, there's no filing of income tax. That's just a simple like a query I could think of.
Yes, there are some particular income tax of the particular.
I think there are network issues.
I think certain income tax for has to don't spell it.
Shravan, you have network issues on your side. Can any of the guest speakers answer Ms. Kharbanda's question? Am I audible?
I think the question is not very relevant. Like, I mean, like just yeah. Thank you.
Yeah, ma'am, the question is very relevant since I think so the attending or the guest speakers have left the meet or some due to some network issues, they are not able to join.
Yeah.
So we'll get back to your question. We'll note it down and we'll answer your question very shortly. Okay, so the question here is if Tata imports a product from abroad, then which kind of tax would be levied on it? So the maximum answers what I have got is the custom duty. So Digvijay, what do you feel like if Tata imports a product from abroad, then what kind of tax would be levied on it? Am I audible, Digvijay? Yeah, Digvijay, am I audible? Yeah, sure. I'll repeat the question for you. Okay. If Tata imports a product from abroad, then which kind of tax would be levied on it? So maximum answers what I have got is B, custom duty. So according to you, what is it? Is it custom duty? Is it VAT? Is it income tax or corporation tax? Yeah, even I feel that custom duty is the tax. Yeah, this which I can continue. Yeah, actually, custom duty is the.
Yeah, am I
For
audible,
startup in
Riddhi?
this day and age has to be updated and have a good. Yeah.
Okay. I really want to apologize for the network issues. Actually, half of the speakers, including me, myself, are all facing the very same thing over. However, we have three speakers absent for today due to some medical reasons. Rest for it, as for the query, if you could just unmute yourself and put out the query here, I and Riddhi would try our best to solve it. Yeah, there are some queries in the chat box as far as I remember. Riddhi, if you could read them out for me, please.
Yeah, sure, I'll read for you. Whether
Yeah, thank you.
for startup in this day and age has to be updated and have a good professional to assist for the taxation matters as the laws are amending at a rapid pace and any taxes would actually cost a startup its of survival. So one has to be updated with all the taxation norms, both direct and indirect.
Okay, I get it. So, is that exactly a question, Riddhi? I think it's more of a statement. Mr. Bibhuti Krishnan, what exactly is your question? Out here. I think it's more of a statement due to the reason that there's no question mark over here, basically. So, even we discuss any startup actually has to be updated in this days, and we ourselves are, so definitely would advise the same for everyone. Reason being that tax issues are very astonishing. They could emerge up at any point of time, undecided, and could surprise you at any point of the day, definitely. If you come to income tax itself, there is no fixed date when the actual audits could happen, right? You could even have the income tax department come on in the end of the financial year in April and completely do an audit over there, or else you could even have it coming in December or August. Any day of the month that they put out, they might do an audit of their own and engage you with the tax formalities, stuff you have never dealt with before. So an entrepreneur definitely needs the advisor over the board, you can actually advise them over the same things, and the books which are to be kept definitely in shape. Well, that is the only thing that will help you out when there's an audit, or as we call it in our filmy language, a raid, to be precise. Riddhi, I hope I am correct here. You being a lawyer would also, you could also provide an opinion on the same. Yeah, am I audible, Riddhi?
Yes, you are, Shravan.
Okay, fine. Riddhi, am I audible? Fine. I would like to also get the opinion of Srivastava, one of the speakers on the thing. What is the opinion on the question, Srivastava? Sir? Am I audible, Arunji? Okay. Am I audible, Digvijay? Okay. If there are any more questions, I would like